My prediction, you can write this one down, oil is headed to $150 to $200 a barrel. And folks, the economic implications and social implications for $150 to $200 a barrel oil all over the world is absolutely off the charts. You can see where the euro is moving to a new high, and euro very, very strong. I think the last I saw around 157. But you can see the same thing for the Swiss franc, the Singapore dollar, Japanese yen, the Australian dollar, the New Zealand dollar, the Canadian dollar. And as they are in strong uptrends, the dollar is the mirror image. They're in a strong uptrend against the U.S. dollar. The dollar is dropping just as rapidly. Same thing is happening out in Asia, where your Singapore dollar, your Philippine peso, your Malaysian ringgit, your Chinese renminbi, the Japanese yen, all in strong uptrends against the dollar. Now, folks, I've spent a lot of time out in the Philippines. My wife and I and our family run orphans' homes. We've got 4 orphans' homes. One in the Philippines, 2 in Indonesia, and 1 in India. And so I spend a lot of time, several months a year, out in the Philippines. Philippines has a basket case economy, a very poor economy, not something you would think would ever rival with any first world nation. The dollar has dropped 30% against the Philippine peso in the last year, 30%. Does that give you some idea of what's going on? We're dropping against virtually every currency in the world today. Okay, gold is definitely related to the collapsing dollar. In fact, it is a mirror image of the collapsing dollar. When the dollar is going down, gold is going straight up. Over the past 37 years, now anybody taking notes, this is a good one to remember. Over the past 37 years, while the U.S. dollar has declined over 80%, gold has risen over 2,945%. Is that a bit of a difference? Today it takes 5 times more dollars to buy the same amount of gold and goods and services the dollar would have bought back in August of 1971. So clearly the dollar is in a severe bear market. Indeed, it's dropped 40% in the last 7 years against a basket of currencies. It's dropped 45% against the euro. It's now at parity against the Swiss franc. And so the dollar is dropping like a rock. This is not all by accident. This is actually partly our government and Fed policy, although they will deny otherwise, but then they don't always speak truthfully. Since 2001, as I said, we've dropped 40%, while gold has risen fourfold from 250 to 1031, and gold is now in the low 900s in a correction phase, which is great. It's going to be in a really good buying range. It can be concluded that gold is a perfect hedge against a depreciating dollar, and this chart would seem to indicate that. While gold goes up, the dollar goes down, and that's been the history over the last 7 years. So when the dollar started to plunge, gold started to soar about 7 years ago, and the dollar is going a lot lower. I will tell you right now, the dollar is probably going to go to at least 52. It's around 72 on the dollar index today. It's going to drop to 52, and it may drop a lot lower. And then I'll tell you in a few minutes what's going to happen after that. Okay, so the collapsing U.S. dollar is incredibly bullish for gold, but it's also important to note that gold has now turned bullish in terms of almost every other currency in the world. So gold's not just in a bull market in terms of U.S. dollars. Gold is in a bull market in terms of almost every currency in the world, which means global demand for gold is exploding. Only in the United States are people not buying gold. 99% of your fellow Americans barely know there's a bull market, the biggest in world history, going on in gold. And I will tell you, over 99% of your fellow Americans are not buying gold and silver, haven't participated. Wall Street has convinced them to stay out. Gold's a bad investment. Stay in our stocks, which have been going sideways for 8 years.